thank you for joining us today at the luxurious Blackrock Spa. I'm here to talk to you today about our company's overall performance in the global simulation and how we adjusted our strategy as our competitors did and who those competitors were. First off, our overall performance. We finished in second place behind Digicam. After a few harsh years in the beginning, we eventually realized our competitive advantages and took advantage of them to move up the ranks and finally replace Expert Images, the second place team. Our initial strategy was a lower quality camera in the entry-level market, a 2-star camera, which we eventually lowered to a half-star camera as we realized we could produce more units than any other team at a lower cost. And in the multi-featured market, we started off fairly high with a 4-star camera and increased it to a 5-star camera over time, and then also decreased it to a 2-star camera as we realized that competitive advantage in production and labor costs. Our closest competitors remained D and E throughout the entire simulation. D gave us a lot of trouble in the entry-level market in low cost, along with E, especially at the end, as E drastically undercut their prices, and we found it hard to sell a lot of our cameras as they dug deep into our market share. In the multi-featured market, we eventually had to lower our quality to a 1.5-star camera during the final year. As every team spread out, we found that we could capture more of the market share this way and gain more take better advantage of our productivity and labor costs.
Good morning, neighbor, and thank you for joining us as we continue our discussion of Blackrock and our performance in the global simulation. For this segment, I'm here to discuss the trends, such as the first one of total revenues. They were continually increasing. In year 11, they took a large jump due to our switch in strategy in the multi-feature market. We utilized our competitive advantage of productivity and labor cost and began mass producing multi-feature cameras of a lower quality at a lower price. Next is our earnings per share trend. They also share the same jump in year 11 as in total revenues due to the same cause, due to the switch in the multi-feature market. They also, in years 13 and 14, as you can see here, they took a mild dip. This is due large in part to the team Expert Image drastically undercutting our prices, and we are unable to maintain our market share and our earnings. Next, we have return on equity. It took a mild dip for a few years, and then we began to utilize our competitive advantage, as mentioned earlier, and things got back on track, showing a large increase in year 11, consistent with the other trends. We also have credit rating. We maintained a strong credit rating throughout all 14 years of the simulation. This is due in large part because we fully pay down our loans every year, with few exceptions when there are unexpected errors in the forecast and competitors' actions. Our stock price, it went down for a few years, and then also showed the same upward trend that the other charts have shown. And our image rating was consistently meeting and thoroughly exceeding investor expectations. This is due for a few reasons. Largely, we maintained salaries that were anywhere from 25 to 40% consistently higher than the industry average. We also heavily invested in both worker training and safety precautions, and we also invested in energy efficiency programs. And that concludes the segment.
Oh, greetings, neighbor. I'm here to talk about some lessons that we learned in this simulation. The first thing that we learned dealt with our employees. By building up our employees and giving them lots of training from the very beginning, we were able to establish a sustainable competitive advantage in labor costs. Building on a sustainable competitive advantage, we were able to create an advantage that could not be emulated in a game that was very easily imitated. Because of the low switching costs in this game, you really needed something that was time specific, and the only segment of this game we found that we could do that with was actually the labor pool. By doing that, we learned that investing in human capital can have a major impact in the success of a company. The next thing that we learned dealt with marketing. By increasing marketing costs, we were able to greatly increase our market share, and high revenues and an increased EPS followed that trend. The next thing we learned, and it was very important, is that even a great strategy can be busted if an opponent or competitor uses a strategy that undercuts you. While their strategy might not be the best strategy, by undercutting you, they're still going to hurt your strategy as well. Another thing we learned is that large revenues don't always equate to having the highest shareholder value. Even though we doubled the revenues of the next company, we were still in second place next to Digicam. The reason for this is that while we sold a lot of cameras, our profit per camera and our operating costs were so high compared to theirs that they still had a better earnings per share than we did. And the last thing that we'd like to discuss is the forecast. While forecasts are a great way to get an estimate on how your company is going to perform, in a dynamic market, having forecasts can also hurt you by giving you unrealistic expectations. Now, joining me to discuss the things that our company did well and did not do so well are going to be Josh and Phil Mary. How you gentlemen doing?
Mr. Shin, how you sir?
Mr. Shin, Mr. Mary.
So gentlemen, what do you think that we did best in the company? Start with you, Joe.
I think one of our best strengths was how we were able to maintain a dynamic presence in the market. We never remained stagnant. We were sensitive to changes in the market, and we were able to apply our competitive advantage when necessary and appropriate.
I personally like the amount of productivity we had for each year. If you looked at the statements in the report every year, we consistently remained the highest producing team throughout the industry. I mean, we almost doubled the industry average every single year, and we almost hit 5,000 last year.
See, for me personally, I think the best thing that we did was dealt with the marketing and tech support. While all the other companies were not focusing solely on marketing, we saw a very easy advantage up in there, and with relatively low expense per camera, we were able to take a large amount of market share, which led to our high revenues, and in return was a big boost for us.
It's true. I also liked how we took advantage of our core competency, and I believe, was it year 11?
Yes.
When we switched strategy?
11.
And we switched from making those 4 to 5 star multi-feature cameras and jumped down and pretty much destroyed the market that year. I believe we had almost half of the sales of the entire industry.
That's true, actually.
Well, that goes back to what I was saying about being dynamic and seeing the appropriate changes at the appropriate time. Because thanks to our higher end quality camera in the multi-feature market, we had developed enough coverage within the market through suppliers and things like that, and we still have the retail coverage when we drop down to a lower quality camera within the multi-feature market.
That's not to say that our move still wasn't risky, though.
Right, but it paid off.
And also one more thing I would like to say is that at the beginning, our roots as a company, using the higher quality cameras, we were able to get a bunch of stores to sell our product. And we learned through the game that as you sell your product at a lower quality, you start to lose sales volume through stores. While you can still get the volume of actual units sold, the amount of stores that are willing to sell your product tend to drop. And having that amount of stores towards the end of the game is a great benefit for us, I feel like, in keeping our volume up.
That's true. As our stores drop, our sales kind of plummeted with it.
Well, that was another thing we did well, was we recognized that it was a simulation and there was a time constraint entailed with it.
Especially during year 14. We completely took advantage of the fact that it is a simulation. We upped our warranty length to, I believe it was the maximum of 3 years in both entry and multi-feature level. And we didn't pay any of those costs. And then also we paid out dividends in the first quarter of the 15th year, which never actually happened.
Right.
So pretty much we sunk the ship.
Yes.
So what do you think we did bad, Phil?
Well, I think what we did bad was we were a little hesitant at the beginning because we didn't fully understand the simulation. After reading the instructions and the manual that kind of went along with it, we were a little hesitant to produce, I think, 5 models in each entry and multi-feature camera. So we started off a little lower because the way it was phrased was that we larger cost up front, and it was something that was to be worked into slowly. That's how I think we interpreted it initially.
I agree. I think we reacted very slowly at the beginning. We should have immediately jumped on our competitive advantage of production and dropped our entry-level prices drastically and quality immediately, instead of fighting with all these other teams throughout the industry for the low cost at a 1 to 2 star entry-level camera?
I think the basic that we messed up on was not going into marketing soon enough. While we had these awesome cameras out there for sale, no one knew that we had them because of market share. We lost so much market share at the very beginning. We were at like, I think around 3% of the market in multi-feature, which is a 5-star camera at the time. If we would have increased marketing, I feel like we could have actually sold more at that time, but we missed that advantage.
Right. I think we spent more on marketing when we had the lower quality multi-feature than when we had before the 5-star camera.
I think if we raised our marketing in the beginning, it may have hurt us in the long run though, because during the last couple of years, it's very easily imitatable to up their marketing costs, and every other team followed our strategy. Their marketing went through the roof to match ours, and you saw our market share drop during the last couple of years.
But overall, I think our performance as well. We learned several things, as mentioned earlier by Mr. Shin. We were adaptive, we were rational, and we were able to stay with the competition throughout all regions and even all markets.
I believe that's fair. I liked how well we came back. Digicam was very strong. They had global rankings throughout the first several years, and we ended up taking them over in years 11 through 14, and they ended up coming back and beating us in the final year. But I feel like to come back that strong and jump right into second place, as we did, was great.
And the best part out of that stage is that we had some pretty awesome cameras. I mean, multi-feature cameras?
That's true. These cameras have awesome features. I mean, did you know they're waterproof?
I mean, who would have thought? Waterproof cameras for such a cheap price? Great deal.
You better get that camera. We're going to need to sell that.
Oh, crap.
Thanks for your time.